All right, so what we're going to do today, we're going to, like I promised you, we're going to cover the FAC, right? FAC 3702 October November 2023 examination. Right, so I'm going to do that piecemeal, right? That is to say, in a staggered approach. I'm not gonna do the entire paper at once. So when I get time, I'm gonna prepare for the other part that comes after this. Then after that, another one. Obviously, I hope to finish this by some I don't know, maybe mid-January or something there, right? So we're gonna start with the first question. I know a lot of students were complaining, well, about this paper. Obviously, maybe it was the examination standard, or there was some change because there was a change in the lecturers. I do not know, but you will see that some of the things that we're going to share with you are going to be helpful. I'm going to show you that the paper wasn't quite hard, but a paper can be hard if students are not properly prepared for the paper, and the preparation part is not always the responsibility of the students. The lecturers also should anticipate the standard of the papers they want to give to students. Then they train students to do those things. So I do not know how much of that was done, but let us now go to the first portion. So the first portion, the first required, had to do with land. And the required said we need to prepare journal entries, and these journal entries should include deferred tax journal entries. And this is for the year ended 30 September 2023 for the land. All right. So I did not put in the additional information that would show us that land is going to be the accounting policy notes, where the accounting policy for land is going to be the revaluation model. All right. That is to say, the subsequent measurement that has been chosen by the entity is the revaluation model on land. So they say that we need to prepare the journal entries, including deferred tax. And this question had 16 marks. All right. So you might wonder, so many students were wondering, is the mark allocation correct? Of course, it is correct. So we are in the year 2023, right? In the year 2023, there was a revaluation of land to its fair value, and the fair value moved from 6,900. That was the carrying amount of land. All right. Now the carrying amount of land moved from 6,900 to 7,200. So that represents a gain in the valuation of land. However, this gain is not difficult, but there is a tricky portion, because for us to account correctly for a gain, we need to know the original cost. So the original cost is going to determine how we account for the gain as well as the deferred tax arising from the gain. All right. So we're going to be guided by the original cost. So the original cost is 7 million. All right. So this is how we do our revaluations. Right. So 7 million is where we are, right? So that is our 00. I don't know. I don't know what that is. Then we can have an upward revaluation. All right. So any revaluation above the original 7 million, all right, is going to be recorded under other comprehensive income as a revaluation surplus, or all right, we can say revaluation surplus. So it's a revaluation surplus or deficit if you want, because sometimes it can be a revaluation upwards or downwards. As long as it's still above the cost, it's going to be recorded under other comprehensive income. Okay, so that's something that you need to know. As long as the movement is above the original cost, the portion of the movement above original cost should be recorded under other comprehensive income, and the portion of the movement below, whether it's a movement upwards or downwards, but as long as that portion is below, then it's going to be recorded under profit or loss. All right. As long as it is below the original cost, it's going to be recorded under profit or loss. So if you look at this, where are we coming from here? We're coming from 6,900, right? 6,900, right? Then we move 100,000 up, we reach 7 million. So there's a 100,000 increase up to original cost. So this movement from below to the original cost, as long as it is below the original cost, any movement, whether it's up or down, that movement is going to be recorded in the profit or loss account. Then we have a portion which is 200,000 upwards. Now this is going to be recorded in the under other comprehensive income. All right. So that is how we account for the movement. So any movement above the original cost, the portion should be recorded under other comprehensive income, and the portion below cost should be recorded in the profit or loss account. And as a result of that, we also have deferred tax adjustments. All right, so if deferred tax arises from items that are recognized in profit or loss, for example, when we specifically deal with this case of revaluation of land, all right, so anything below here is going to be recorded in the profit or loss. So if any deferred tax arises from that movement, from items that are recognized in profit or loss, all right, then the deferred tax here is also recognized in profit or loss. So the deferred tax for this 100,000 should also be recognized in the profit or loss because it arises from items that are recognized in the profit or loss. And this, what is this? If there is any deferred tax that is going to arise from items recognized in other comprehensive income, then the deferred tax adjustment is also recognized under other comprehensive income. All right, so there is a deferred tax to be recognized in profit or loss. There is a deferred tax to be recognized under other comprehensive income. So basically, that is what the question required you to do when they say include the journal entries. Brilliant. So let's go to the actual question and see how we answer that. So this is the first journal. So as we know, the land. And so they say that if you look here, they say, which is something that is standard, right? So of course you need to check. They say ignore narrations, show all calculations. They also want you to show the journal where the journal will be processed. Like, will it be a profit and loss entry, other comprehensive income? Is it a statement of changes in equity? Is it a statement of financial position? So the land is always a statement of financial position. The land has increased. So the original increase, adjustment to the land is the difference between those two amounts, the previous amount and the current amount. All right. And because it's an increase, our land has increased. We're going to debit with the full amount. But we remember that part of the revaluation surplus, right, is below. So the portion that is below the cost is 7 million. Anything below that, this 100,000, will be recognized in the revaluation surplus account that is reported in the profit or loss account. Then the portion above the 7 million, that is 7.2 minus that, which is the 200,000, will be reported in the revaluation surplus under other comprehensive income. All right, so this is, you can refer to this as your journal number 1. All right, so that's the original, so that's the first entry that we're gonna make. Then we come to journal number 2. So journal number 2, we need to remember that according to, so we have this deferred tax is governed by ES 12, which is income taxes. So there's a paragraph there, 51B of the income tax. I wanted to say the Income Tax Act just now, but this is an accounting standard. So they say that the carrying amount of a revalued, right, non-depreciable asset measured using the revaluation model, such as land, all right, shall be recovered by means of sale only. So it doesn't matter the intention that we have. We might have an intention of not selling, or we might have an intention of keeping the land, but that intention is overridden by this particular standard, which says that land is non-depreciable asset, and it uses the revaluation model. Therefore, we're going to presume and override in the intentions. And the presumption is we're going to recover this revaluation by means of a sale transaction. So we're going to recover the carrying amount of land by means of a sale transaction, not through use. So as a result, because it's by means of a sale, it's going to attract capital gains. So if you read in your, where is that? In the rest of the information in your paper, it tells you the capital gains inclusion rate is 80%, and the normal tax rate is 27%. Right now, we are going to account for what is this? We're going to account for deferred tax. So we have now when we account for deferred tax, we have to split between the amount recognized under other comprehensive income. Will have its own deferred tax. All right, recognized under other comprehensive income, because items that attract deferred tax and they are recognized in profit and loss, their deferred tax will also be recognized in that profit or loss. All right, so I hope I did this right, because sometimes it's easy to mix up. Like when I was preparing for this, I confused the 200,000 and 100,000. I put one, like I mixed them up, you know. So if you do see something that is mixed up here, just remind me, because yeah, you know, I originally put 100,000 here and a 200 there by mistake. So I hope this is now correct. All right, so our revaluation surplus. So this is how you account for your deferred tax. The deferred tax, all right, that arises from other comprehensive income should be debited to the revaluation surplus, or debited or credited to the revaluation surplus. All right, but in this case, it's a debit because it's an expense. All right, we have gained and we are being taxed on that gain. We are being taxed, yeah, on that gain. So we debit the revaluation surplus account for the deferred tax, and that's in under other comprehensive income. So that is the 200,000, but because of this paragraph under income taxes, we assume the carrying amount is going to be recovered through sale, and then that's going to attract capital gains, right? Okay, so we're gonna have 200,000 times 27% times 80%. With these amounts are given to us. So that gives us 43,200. The difference is we recognize this under other comprehensive income because that movement has been recorded under other comprehensive income as well. And then the other debit is to debit the income tax expense for that deferred tax that arises, that is recognized in the profit or loss. This amount of 100,000, but because this is going to be recovered through what is that? Through sale, then we're gonna account for it like using the inclusion rate of 80%. Okay, the presumption is that we will recover that through sale. So the deferred tax implications reported in the profit or loss is 21,600, reported under other comprehensive income, and the total deferred tax movement is going to be the full amount, right, which goes to the statement of financial position multiplied by that. And that's your 64,800. So this was what was required by your question. So if you want to, try to allocate the marks, right? So because I think it had 16 marks, and as you can see here, you obviously could have gotten everything definitely correct, right? Because that's easy. So you can say half a mark here, half a mark, right? For the correct entries in the correct columns. So that's altogether gives you 3 marks. Then you can get half a mark for the names, all right? and the all right, so you can get half a mark for each of those, identifying the correct accounts. All right. So how much does that give you? 1, 2, 3, 4, 5, 6. So that also gives you 3 marks, right? Right. Then so that's going to give you a total of 6 marks for now. Then you have the rest, and then you can think, well, maybe this is gonna give you 1.5 marks, right? This is gonna give you 1.5 marks. This is gonna give you 1.5 marks, you know, and maybe this 1 mark, maybe this 1.5, maybe this 1.5, you know. And so if you do the quick calculation, you will see that you end up at this is 1, 2, 3, 4, 5. So you probably reach somewhere around 16. I'm not sure of the actual mark allocation, but you can see the sense that it makes when they allocate those marks to you like that. So, well, it could be worth around 15, 16 marks. That's correct. That's the correct weighting of such a question. Because normally, if they would give you this, this would normally go for 8 marks. The deferred takes on, and this normally would go for 7 marks, or something like that normally. All right, so I think that's where we are. So this was a movement upwards, which included an apportionment of the portion to profit or loss, also to other comprehensive income. Just for the, so this is what was required, but I'm going to do another example based on this, but this was not part of the required, just to demonstrate. So we did this movement from 6.9 to 7.2. Let's say let's focus now on the movement on the 30th of September 2020. All right. So which means that we want to do the journal entries at this date. So there is a movement from 7.3 to 6.9. That also is very, very interesting, right? It's very interesting because it's moving from 7.3 to 6.9, right? So we just have our 700 there, which is the 7 million rather, which is the cost. Then it's moving from here to here. So any movement, this movement of 300 is above the cost. So it's going to go to other comprehensive income. But it continues to move from 7 to 6.9. So there's an extra 100,000, which should be debited to the profit or loss. So this is a revaluation deficit, or we can still use the revaluation surplus, doesn't matter. And so this 300 is going to be recognized under other comprehensive income. This 100,000 is going to be recognized under the profit or loss. And we're also going to recognize the deferred tax under other comprehensive income. And we're also going to recognize the deferred tax here under profit or loss, because the item arises, the item is recognized under profit or loss, then the deferred tax that arises from that item should also be recognized in profit or loss. Okay, so if we want to do the journals, we see that as a revaluation deficit. We can still say revaluation surplus, but it's a debit of so the portion that goes to the OCI is the portion above cost, and the portion that goes to profit or loss is the portion below cost. So that's the 100,000. But our land has decreased in total by 400,000. So our land in the statement of financial position, we have to credit by a full amount of 400,000. Right. Then in the income statement, we have to apportion between other comprehensive income and profit or loss. So now it becomes easy, because once you identify this, then you have your deferred tax, based on the full amount. The deferred tax on your statement of financial position is based on the full movement. It doesn't matter. It doesn't take care of the allocations. All right. So you're gonna have a deferred tax there. Do you know why we're debiting that? Do you know here why we did a credit here, why we did a debit here? Because this resulted in a taxable. This was a gain, right? A taxable gain. All right. So because it's a gain, which means that we will be liable to pay tax later. All right, so that's why we credit to say this is the deferred tax liability. But now, because we are losing out, it's a loss. So that would result in a deferred tax asset. That's why we debit the deferred tax, right, to reduce our liability for taxation. Right, and the revaluation surplus deferred tax is going to come from the OCI like that. And then the profit or loss, we debit the income tax expense. So for the profit or loss, when it comes to deferred tax, we debit the income tax expense, not the revaluation surplus. But for the OCI, we debit the revaluation surplus because amounts under other comprehensive income are going to be disclosed net of tax. So that's why we have to, there's no portion under the other comprehensive income where it says taxation, so we have to put those amounts net of tax. That's why we have to debit this taxation to the original, what is that? It's not debit, it's a credit to the original entry here, so that this amount will be disclosed net of tax. But now when it comes to the portion that goes in the profit or loss, we debit the income tax expense, not revaluation, the income tax expense, because then we have to show in the income tax expense line, all right, that this is, but we have to disclose it in the income tax line expense, whatever it is, income tax expense line item, all right, in the profit or loss. So basically, this is what you expected to do, and I'm sure if you guys were prepared, if the lecturer, I don't know how if the lecturers went through this with you, tried to test you on this, but I think it's there in the study guide. I haven't looked at the study guide. All right, so I hope now you have a clear understanding of how these things work. So next, when I get another time, I'm going to record the portion after this, and then after that another portion. And if I still have time, if students haven't opened their classes, then I can still get a few moments to prepare and present to you. All right, good luck with your studies.